Hello, YouTube friends, welcome to my channel. Welcome to the world of Forex trading, where currencies are bought and sold in a global marketplace. If you're new to this financial adventure, don't worry. In this video, we'll break down the basics of Forex trading in a simple way, helping you grasp the key concepts and get started on your trading journey. What is Forex? Forex, short for foreign exchange, is the largest financial market in the world. It's where national currencies are traded against each other. Imagine you're planning a trip to another country and need to exchange your home currency for the local one. That's essentially what happens in the Forex market, but on a much larger scale. How does Forex trading work? Forex trading involves buying one currency and selling another simultaneously. These currency pairs are quoted in terms of exchange rates. For example, if you see the euro to US dollar pair with a rate of 1.1500, it means 1 euro can be exchanged for 1.15 US dollars. Major currency pairs. There are various currency pairs in Forex, but the major ones include euro to US dollar, euro/US dollar, US dollar to Japanese yen, US dollar/Japanese yen, and pound sterling to US dollar, British pound/US dollar. These pairs have higher liquidity and are more widely traded. Market participants. Several players participate in the Forex market, including banks, financial institutions, corporations, and individual traders like you. Central banks also play a crucial role by influencing currency values through monetary policies. Leverage and margin. Leverage is a double-edged sword in Forex trading. It allows you to control a large position with a relatively small amount of capital. However, it also magnifies the potential for both gains and losses. Margin is the amount you need to have in your account to open and maintain a trading position. Long and short positions. When you expect a currency pair to rise, you take a long position, buy. Conversely, if you anticipate a decline, you take a short position, sell. Profits are made when your prediction is correct, and losses occur when it's not. Technical and fundamental analysis. Traders use two main types of analysis to make decisions: technical and fundamental. Technical analysis involves studying price charts and patterns, while fundamental analysis focuses on economic indicators, news, and events that may impact currency values. Risks and risk management. Forex trading involves risks, and it's crucial to manage them wisely. Set stop-loss orders to limit potential losses and take profit orders to secure profits. Never invest more than you can afford to lose. Demo trading. Before risking real money, practice with a demo account. This allows you to understand the platform, test strategies, and gain confidence without financial risk. Continuous learning. The Forex market is dynamic and influenced by various factors. Stay informed about economic indicators, global events, and market trends. Continuous learning is key to becoming a successful trader. In conclusion, Forex trading is an exciting and potentially rewarding endeavor, but it requires knowledge, discipline, and risk management. With this simple guide, you've taken your first steps into the world of Forex. Keep learning, stay informed, and remember that success in trading comes with experience and a well-thought-out strategy. Good luck on your Forex journey. Don't forget to comment down below, like, share and subscribe. See you on the next one.